Welcome to Electrified. It's your host, Dylan Loomis. So, what's going on here? In this episode, I'll piece together all of the breadcrumbs to show you why it's definitely, at least very possible, Warren Buffett is secretly building a huge Tesla position. Most of the good breadcrumbs will come toward the back half of this episode, but the context leading up to them is just as important. And let me be clear in saying upfront, this is not confirmed, but the trail of breadcrumbs I'm about to show you is incredibly interesting and definitely worthy of an episode on the matter. If this proves to be true, this would be a massive deal for Tesla due to the investing clout that Warren Buffett and Berkshire still carry. And before you smash the thumbs down, post a negative comment and bounce, I am fully aware of the historic beef between Berkshire Hathaway and Elon and Tesla. But I am also aware that Buffett has some young guns in his corner that have helped him to expand outside of his value-driven principles as of late. And look, it was just yesterday that in a group chat with some friends, I said Buffett was washed, mainly because he's missed the boat on Tesla and Bitcoin for being too rigid and old school in his thinking, and investing in 2020 is worlds different than when it was in his heyday back in the 1970s. And look, no disrespect to Warren Buffett here. I still admire him for many things, but facts are facts and times change. So let's do this. Let's quickly set the stage for Tesla and Warren Buffett for those unaware. During last year's Berkshire Hathaway shareholder meeting, Buffett said, "I would say that the success of the auto companies getting insurance business is probably as likely as the success of the insurance companies getting into the auto business." Of course, taking a shot at Tesla and Elon trying to get into insurance. And then there's Elon, who in an interview with the New York Times said he has managed to create a great image for himself as a kindly grandfather, which is maybe overstating the case. Elon also said on the Joe Rogan podcast he was, quote, "not the biggest fan of Buffett and Berkshire's business of allocating capital was a boring job." When Warren was interviewed by Yahoo Finance, he was directly asked if he would invest in Tesla stock, to which Buffett replied no. And then we have the ancient Charlie Munger, who said publicly about Tesla, "My thoughts are too, I would never buy it and I would never sell it short." And he also said, "I think Elon Musk is peculiar and he may overestimate himself, but he may not be wrong all the time." So yeah, I get it. It seems unlikely on the surface that Berkshire is buying Tesla, but let's get into the good stuff, because this may all become irrelevant very quickly. Back in 2010 and 2011, Buffett scooped two young money managers, Todd Combs and Ted Weschler, to take over the key investment operations at Berkshire. Who do you think has been behind Berkshire buying up tech companies like Snowflake, Apple, and Amazon? Combs and Weschler may have similar values similar to Warren, but they're also smart and more in touch with the style of investing that has paid off most handsomely over the past 10 years, growth investing. But here we go. Our friend Frank Peelen has done some excellent work here. His Twitter is in the description. He is someone you need to follow if you're not. He's been compiling data from 13F filings, which are reports filed by institutional investment managers. You can look these up on the SEC website using the Edgar database, which is Electronic Data Gathering, Analysis, and Retrieval System. It just collects and indexes SEC filings. So back to Frank's work. Here's what he said. Some interesting context to this S&P inclusion is the information currently coming out of the 13Fs. We already knew Bailey Gifford sold off a fair amount of its Tesla stake during Q3, but it now turns out that Bailey wasn't the only institutional investor who did so. Although Bailey was the biggest seller far and away, many institutional investors significantly reduced their positions during Q3. So where did these shares go? That's what's so curious about the 13Fs. It gives no clear answer to where the shares ended up. I was fully expecting to see a new institutional investor that amassed a massive stake in Tesla during Q3 and effectively scooped up Bailey's and others' shares. However, unless this investor missed the official deadline for filing the 13F, that is not the case. I've linked to Frank's blog below if you want more detail. Basically, from following the 13F reporting, there are about 50 million shares of Tesla that are currently unaccounted for, and retail investors scooping up 50 million shares is highly unlikely. I agree with Frank that the most likely scenario is there is a new big institutional holder of Tesla. Here's where it gets good. Berkshire Hathaway omitted one company from their 13F filing and instead chose to disclose this newly acquired stake separately to the SEC in a confidential filing. And get this, it's because they were worried that disclosing the position to the public would move the market too much. Can you think of a company that might move the market too much right now? David Cass, finance professor at Maryland, said he is undoubtedly building a large position now and may reveal it in his next 13F. This dude has followed Buffett closely for 30 years. He also confirmed, quote, "Buffett has received confidentiality treatment several times in the past," end quote. James Shanahan, an Edward Jones advisor, also said, "I suspect that Berkshire is building a large large position in a public company, and they would like to continue to do that before disclosing it, end quote. So there is a $16.5 billion difference between the value Berkshire declared in their 13F versus their 10Q, $245.5 billion in the 10Q versus $229 billion in the 13F. If you look at some historical differences between these Berkshire filings, you see a $16.5 billion difference is definitely abnormal. We did get an explanation from Business Insider that $6 billion of the disparity is from an investment into 5 big Japanese trading companies, so we're left with $11 billion of investment that Warren and Co. are making in secret. Here it gets even more interesting. Companies have to disclose an acquisition of a 5% or more stake in a company within 10 days to the SEC. So unless Berkshire was also allowed to keep this confidential, which is possible but unlikely, the $11 billion investment must be less than 5% of the company in which it was invested. This means the company's market cap has to be greater than $220 billion, which really limits the options here. There are only 25 companies that meet that criteria on United States exchanges. And even further, Berkshire already owns 9 of them and is one of them. So there are now only 15 other companies with valuations over $220 billion. So yes, of course, none of this actually proves anything, but when you factor in the secret Berkshire investment of about $11 billion, which when you divide that by Tesla's stock price of $429 at the end of Q3, it gives us about 25 million shares that could make up for part of the 50 million shares of Tesla that have been missing from Q3. Because as mentioned, 50 million shares can't be explained away by retail investors, or at least it's very unlikely. But 25 million, that's far more reasonable. What other stock would Warren want to keep secret so as to not move the market too much? Is there a hotter, more popular stock than Tesla right now? If so, please let me know. And Berkshire does own the EV maker BYD, so I can promise you he's not totally clueless in the EV space. But what do you guys think? I would honestly love to hear your thoughts about this below. That's gonna wrap it up for today's episode. Please take a moment to like the video if you did. Consider subscribing for more Tesla content, as I will definitely keep everybody posted on these revelations. Thank you guys for watching, and I hope that you have a great day.